Hi there, I'm Suzanne with caregiverhaven.com. So, what if I told you that the choices you make in the next few weeks could save you thousands of dollars on your taxes? Not next year, not someday, right now, before December 31st. I can't believe people don't know this and people don't do this. Most families caring for aging parents have no idea they're leaving money on the table. Money they've already spent on medical care, Medicare premiums, healthcare costs, money they deserve to get back. They just don't know that they can reduce their taxes next year on their tax forms. Caregiver Haven is here to help you capture every single deduction you're entitled to before that December 31st deadline disappears. And that means that your tax accountant is going to know that you're a pretty sharp cookie when you take your forms in there. You have spent enough money on your loved ones and they've spent enough on themselves, so it's time to get some of that back. All right, so the first thing we want to do is here's what I hear from families all the time. If you've got receipts scattered everywhere, some in your drawers, some in your car, you don't even have receipts, some you've probably thrown away. You're not sure what counts as a medical expense and what doesn't. What was that drive to the doctor's office? Was that deductible? What about those new hearing aids? What about physical therapy? What about therapy alone? Counseling? What about mental health issues? All look at this. This is all deductible. And nobody's explaining this stuff in plain English. Meanwhile, tax season is coming. It'll be here before we know it. And you've spent a fortune on healthcare this year, but you have no idea how to prove it. And you're terrified you're going to miss deductions that could save you serious money. Well, here's the truth. The IRS isn't going to call you and say, hey, you forgot to deduct your Medicare premiums. Your tax accountant will. They're perfectly happy if you overpay. And I'm not okay with that. You shouldn't be either. And that's why we're talking about it now. So let's break it down exactly what you need to know and what you need to do before December 31st. Now, I'm going to tell you an interesting story. In practicing medicine, everybody wanted to come in December. Why? Because they've met their deductibles and they wanted to get in those office visits. They got in as much with the specialist they could by the end of the year because they'd already paid enough out. And they knew that they could take a tax deduction next year if they got in now, and they wouldn't have to pay any more because they'd already paid into the system. Okay? So November, December, it's almost impossible to get into any specialists you want or any kind of medical appointments because everybody knows this trick, but you can do it for next year. Okay. So tip number one is to understand the 7.5% rule. The 7.5% rule says that you can take medical deductions. The IRS lets you deduct medical expenses that exceed 7.5% of your adjusted gross income. So your tax accountant gets your adjusted gross income and then 7.5%. Let's do an example. If your income is $40,000, okay, your adjusted gross income, let's say you do $100,000, but you've got it down to $40,000. That's your adjusted gross income. All right. Now you can deduct medical expenses above $3,000. So if you spent $8,000 on medical health care this year, you can deduct $5,000. Okay. $5,000. That's real money back in your pocket. That's money you need to deduct. You don't want to pay taxes. And here's where December becomes critical. If you're close to that threshold, maybe you're at 2,800 and you need 3,000, you can schedule that dental work, buy new glasses before December 31st, see if mental health is the thing you need and can deduct. Oh my gosh, there's just so much. It's just one decision that you can make that could unlock enough to get you over the threshold. Tip number two, Medicare premiums count. So many people do not write off their medical premiums. I've written them off all my life. Here's something you don't know. They are tax deductible. Part B, Part D, Medicare Advantage, even Medigap, supplemental insurance. If you have original Medicare, that is, all of it counts as a medical expense. And we're not talking about pocket change here. Medicare Part B alone is over $1,700 a year for most people, and Part D adds up more. Medigap can be another $1,500 to $3,000 depending on your plan. So when you add it all up, you're looking at a $3,000 to $5,000 in deductible premiums that many families never claim because they don't know. And IRS loves that. Oh, they love it. So go grab your Medicare statements right now and add up what you've already paid this year. That number matters, and see if you or your parent, your loved one needs any medical equipment this year. Get it before December 31st. Get a prescription really helps too. All right, so what actually counts as a medical expense? Let's look at this, okay? So let me give you a quick list of what the IRS considers deductible medical expenses, because it's way more than you think. And your tax accountant will also know exactly if you can take more and more and more. So don't think this is an all-inclusive list. Doctor's visits and copays, prescription medications, dental work and dentures, eyeglasses, contact lenses, hearing aids. Yes, the $3,000 hearing aids, they count. Physical therapy, mental therapy, counseling, medical equipment like walkers, wheelchairs, hospital beds. Get your doctor to write a prescription for those. Electric recliner chair, even mileage to and from medical appointments. And that last one, the mileage, it adds up so fast. Every single drive to the doctor, the pharmacy, the physical therapist, those miles count, but only if you track them. And there is an app on your iPhone that'll track it for you. It tracks everywhere you go all year. You've just got to put in to the doctor that time. Long-term expenses also count. Medical necessities, nursing home care, in-home care services. These are partially or fully deductible if a doctor has documented the medical need. But you need documentation. You need receipts, you need statements, you need proof, which brings me to the most important thing. You got to get organized. You just have to get organized. Now, what does this mean for you? None of these deductions matter if you can't prove them. And if the IRS calls you up in years down the road and says, hey, we want those receipts, bring them in, you want them. So you want billing statements, explanations of benefits from your insurance company, payment records, which everything's online these days. That's not that hard. And I know organizing paperwork is nobody's idea of fun, but doing it now in December beats panicking in March, when your tax preparer is asking for those documents and you can't find them. So here's what you're going to do. I want you to start collecting them, and you have until April to collect them. You just have to spend the money before December 31st, but you have until April, when it's time to do your tax returns, to find them. So start going down the list of everything that you can think of that you want to ask your tax accountant, and call them right after January 1st if you want, or right now, in fact, and start finding out, can I deduct this? Can I deduct that? Can I deduct this? Can I deduct that? They'll tell you if you need a prescription from the doctor or not. Most families who plan ahead are going to keep their money. Then all you have to do is just get 12 big envelopes, those big envelopes, and put January through December on each one of them. And what happens is you're just going to take all of January receipts, throw them in there. All of February, throw them in there. All of March, throw them in there. Don't worry about anything. You don't have to separate them out or anything. If IRS ever calls you, all you have to do is say, well, what month was that? And you've just got that envelope. You don't have to go through a whole year's worth of receipts. Is that cool or not? So just keep track, in your mind, or go back to your planner and look at your appointment book. When did mom or dad have these appointments? What happened there? Did you buy any equipment? What changed from last year? Look at all that stuff and just start writing it down, and then go in the hunt, I call it. Start looking for those receipts and get them from your doctors. And by April, you have written off and written off and written off. And that is so cool to save that kind of money for yourself and your loved ones. It shows fiscal responsibility. So I know a lot of this is overwhelming for you. The medical bills, the tax rules, the Medicare. That's why you have a tax accountant who's going to do all of this for you. You don't have to figure it out alone. And Caregiver Haven is here for you too. So if you liked what you hear, if it helps you, if it gets you thinking, if it plants that seed, go ahead and hit the subscribe button so you don't miss future videos. They're going to save you time and stress and money. And second, give this video a thumbs up if it helped you, because this helps not only us, but other members, and it helps me to reach out to other caregivers all across the United States who need to know this stuff. Share it with anyone who's caring for aging parents or any seniors so that we can start paying less for things that we've already spent money on. We don't need to pay taxes when we don't have to, right? So get the 31. I do have a checklist for you, and it's the 31 legal and financial documents, if you don't already have it, that you're going to need to get eventually, or just copies of these documents. And I put mine in an accordion folder, so if anything ever happened to me, my kids would have everything they need right there. That's what this 31 legal and financial checklist is. 31 documents that the kids have to close my estate. Okay. And what the attorney's going to ask for, what the courts are going to ask for. So you might as well get it. All right. And like I said, that's another issue. But for right now, look how much money they have spent this year, you or them. See if you're at the 7.5% threshold, and get those receipts sometime between now and April tax day. Okay? Well, I've spent enough time talking about this, so everybody take care. And again, help me to reach more people by giving me a thumbs up, sharing, and subscribing. We'll get your finances straightened out. It's not that hard. Take care. We'll talk soon. Bye-bye.